Welcome back to the Loveland Report and the Loner Ranger Show. Bruce Woodburn alongside Cleve Loveland, the voice of real estate here in Florida. Cleve is out and about taking a big old listing for a client, and he had to cut out a little bit early. He had a packed Saturday, and I just want you to know that if you want to sell your home at top dollar, or you want to go out and find a home and have a great negotiator, call Cleve Loveland. He is the voice of real estate here in Orlando. He's been in the real estate business for over 30 years, one of the top producers, not only in Florida, but in the country. And I'm proud to partner up with him. Why? He's a lot of fun. And I'm going to tell you something. The guy he'll fight for you. He don't lay down easy. So call him when you go write this number down, 407-352-8118 or cleveloveland.com. All right. I promised you I had some juicy things to talk about. But before we get into that, I want you to know that if you're self-employed, you have a lot of advantages in some way, and you have disadvantages in another. So self-employed, you have no cap on your income. Now, you don't have any floor either. So it really depends on how good you are at running your business. But even if you're good, you have the ability to find ways to write things off so you can reduce your tax consequences, your tax footprint, and you can do it legitimately. And you know that if you are self-employed, I encourage you to have a good CPA to help you find all those constructive ways to write things off. Okay. They got to be legit. I wouldn't ever encourage anybody to do anything that wasn't legit. You got to be honest. That's the way the Lord wants it. And that's the way we're going to do it. So do it legit. Okay. But when you do that, then you come to a mortgage company or bank and you bring them your tax returns and you're going, hey, Billy Bob, you told me you made $500 a year, but it looks like you're making $5 a year. That's because I got a good CPA. Good. That's great. You saved yourself a ton of tax dollars. That's fine. As long as it's legit, keep doing that. But a wage earner, W-2 can't do it. So I've got a friend. I'm going to tell you right now. I'm going to tell you this. I can't mention any names because, first of all, they're liberals. Second of all, they're attorneys, but they're good friends, and I love them dearly. Okay. And they make really good money, like really good money. Between the two of them, probably about $3 million a year. Okay. But they're W-2. They're W-2. And they have no way. They're going to pay almost $1.5 million in taxes on that much money. And you may look at that and go, that's fine. They should. They're making a lot of money. They work really hard, and they went to school for a long time to do it. And they work hard. Now, I think they're worth every bit of it. I think that I'm proud of them for making that kind of money. But what they're not understanding is how to reduce that tax consequence. So how do you do it? If you're a W-2 wage earner, it's really tough to do. So let's just say you make $300, $500, maybe even $1 million a year on W-2. Congratulations. You've got a great income. You probably got a pretty close relationship with the IRS too. The problem W-2 wage earners have fewer opportunities for deductions than many business owners. So buying a traditional long-term rental doesn't automatically mean you can deduct rental losses against your W-2 salary. Rental activities are generally passive, so they can help you, but they're not going to help you all the way home, okay? For high-income taxpayers, the special rental real estate loss allowance phase out. So you can only phase so much out because it's passive income. So the short-term rental opportunity, let's talk about that. Now, short-term rental may make a lot of you think that becomes a job. It could, but you can hire people to do that for you too. Property managers like Cleve Loveland. There's people that specialize in short-term rentals. Under the passive activity regulations, and activity where the average consumer's stay is about 7 days or less. So when you're short-term rental, 7 days or less, that doesn't mean they can't stay longer, but 7 days or less, isn't treated as rental activity for these passive activity rules. So if there's 7 days or less, it's a whole different category for you. So that doesn't automatically create W 2 deductions. Material participation becomes critical here. If the taxpayer legitimately, materially participates, losses may potentially be treated as non passive. Depending on the taxpayer's circumstances, those losses may potentially offset their non passive income, including W 2. So there are really good ways to offset that. What creates a potential loss? A rental property may generate deductions for things such as mortgage interest, property taxes, insurance, repairs, management, and operating expenses. And our favorite, depreciation. Then there are cost segregation. Now, you know that when I interviewed my friend Claudio Gambin from GFG Solutions, who is one of the best money managers I've ever met, I guarantee you he's better than yours. This guy is amazing. If you want me to connect you with the best management for your money, they not only do the they audit your taxes. They meet with my CPA. They meet with my financial people. They meet with my will and trust attorney, and they put it all together to save me taxes and help me invest. That's GFG Solutions. There's a free plug for you guys because you've just made so much money for me. I am very impressed. So important. Okay. A property structured short term rental may create tax planning opportunities for certain high income W 2 wage earners. That's accurate and much safer than trying to say you can just write off everything if you just buy an Airbnb. So it's not like that. Your $1 million W 2 example, let's just talk about that. Here we go. I've got a friend earning $1 million a year, virtually all W 2 income. He's doing great. But instead of only asking, how can I make more money? He wants to know, how can I convert some of this income into an asset that can build wealth and potentially create legitimate tax advantages? That's where real estate gets interesting. So buy the right short-term rental, use financing rather than necessarily paying cash. Property generates rental revenue. Guests help pay expenses and mortgages. Owners build equity. Property may appreciate, which it better appreciate. Depreciation may create legitimate deductions. Cost segregation can accelerate certain depreciation if the activity and taxpayer meet applicable requirements. Some losses may potentially offset non-passive income. So here's the deal. Don't just make money, convert income into an asset. If you're a high income wage earner, W 2, and you're paying a fortune in federal income taxes, don't call me looking for a tax loophole. Call me to talk about building wealth through real estate. I'll work alongside your CPA, your financial advisor, to determine whether a short term rental makes sense for your particular financial plan. And I'll show you how we can create a financial machine for you. You call the Lone Ranger right now. Orlando, 407-250-9144, or go to webringyouhome.com. That's webringyouhome.com. I want to thank Cleve Loveland. He had to bug out a little bit early today, but I want to thank Cleve and always check out his listings. You can go to webringyouhome.com. That's webringyouhome.com. But before we go away, I want to talk a little bit more about some things that are important. The market. What's interest rates doing? Right now, they average at 6.67%. Okay. I compare that. My mortgages, when you shop me, I'm going to get on a Zoom call with you and we're going to look at all the big players and what they're posting for interest rate based on your circumstances. So I have a system that I can plug your credit score in, your debt ratio, the type of loan you're getting, the property you're buying, and I price it excuse me, you see my pricing, you'll see Bank of America, Wells Fargo, Goldman Sachs, Chase, all kinds of them, hundreds of them, hundreds of them. You see all their rates. And I can show you right on the screen what they're going to post. Then we get on and we show you against Rocket Mortgage. I'm going to tell you something. If you go to your credit union right now and get a quote, I want you to then say, can you get on and shop me against Rocket Mortgage and Chase and the Loan Arranger? They ain't going to do it. They're not even allowed to do it. Their companies wouldn't even let them do it. But I do it freely. Why? Because transparency is honesty, and it keeps people honest, including my employees. My employees will never lie to a customer. They won't mislead you. I won't provide a loan for you that's not the best loan you should get. If you're bringing your adult children to me for a mortgage, I guarantee you they will be treated like my adult children. Matter of fact, my son Chase works here. He's one of my best loan officers on my team. And I'm going to tell you something. That guy, I listen to him over there. He's a talker. Don't get me wrong. I don't know where he gets him from, but he's a talker. But listen, I hear him over there and he's doing, you know what he's doing? He's doing everything he can to help educate and save my clients money. It's just unbelievable to listen to him. Alejandro, I trained him in this business. Now, he was a loan officer for Lennar Homes when I hired him. Oh, boy. Phew. Wow. Those in-house loan officers for the builders. So he took a little training, but I'm going to tell you something, Alejandro, and he speaks Spanish. This guy is salt of the earth. He loves his customers. He bends over backwards. He comes in early. He stays late. He takes calls on the weekends. He's helping my clients. You know why? Because he's passionate about it. He's passionate about it. And the guy's doing great. He's doing really good. I'm proud of him. Libna's on my team. She's one of my loan officers. She speaks Spanish. She is a client care. She just wants to make sure that you're happy and she gets a good product for you. And she's just really good at putting all your numbers together. Now, they all do this and then they put them together so I can review it and do a Zoom call with you and show you the best way to negotiate. My name's Bruce Woodburn. They call me the Loan Arranger. They call me the Loan Arranger for a reason. I arrange mortgage loans for people just like you, your family, your employees. You should, if you're an employer and you're not helping your employees become homeowners, shame on you. You don't have to contribute money. You need to get them over to me. I do. Listen to this. My friend Mark, I'm not going to give you a last name, is a big shot with a giant pharmaceutical company. Okay. Now, I just closed a $2.5 million loan for one of them. Now I got all their employees. I'm doing loans for all their employees. And some of them are smaller on the wage earner. Some are higher on the wage earner. But you know what they did? They bring me into their company and I help their employees become homeowners. You know why they do that? Because they love their employees. Do you know what else it does? When you have an employee that's a homeowner, according to the Department of Labor and Statistics, they will stay with their employer 4 times longer. Look it up on the interweb. I got that information. I have all the statistics. You got a better chance on graduating from college, a better chance on finishing high school, better chance you're going to vote, less teenage pregnancies, higher grades. The socioeconomic benefits of homeownership are even outweigh the monetary benefits of homeownership. You got to help your people become homeowners. And I talked about gifts. Now, all you family members that have the ability to give a gift to your children or grandchildren, do it while you're alive, folks. Do it while you're alive. Let's help them together. 407-250-9144. Or go to WeBringYouHome.com. I'm the Loan Arranger. Call Cleve Loveland, the voice of real estate, at 407-352-8118. He's right there to help you buy, sell, or manage your property. And I'm telling you, chances on one of them rooftops in your neighborhood was bought, sold, or managed by Cleve Loveland. I am the voice of the voice of mortgages. So you can call me again at 407-250-9144 or go to WeBringYouHome.com.